Senator Daines from Montana is recognized.
Chairman, thank you. I want to start by expressing my continued concerns my colleagues have had with inflation we're seeing in the economy. The last time you were here before the committee, real wages were down. Well, they're still down as we sit here today. 1.9% over the course of 2021, to be more precise, and I believe it's a direct result of this inflation that we are seeing. CPI inflation grew by 6.8% year over year in November. Tomorrow morning, we're going to get the CPI reading for December. I think we all know it's not going to be good news for hardworking Montanans, hardworking Americans who are seeing their wages eaten away month after month by inflation. Economists are projecting that CPI inflation will rise about 0.5% on a month-to-month basis in December, which will leave CPI inflation up at 7.1% in 2021. This would be the biggest annual increase in 40 years and is well above the Federal Reserve's 2% target. This, of course, is not that surprising to many of us who were here in this very room who warned this would happen when our Democrat colleagues passed this very reckless $1.9 trillion spending package in March of last year, when the economic recovery was already well underway, and we pointed out there was nearly $1 trillion of unspent funds coming into calendar year 21. The Democrats, on a purely partisan basis, pushed another $1.9 trillion of reckless spending in March. Frankly, we should be thankful at this moment that the most recent multi-trillion-dollar reckless tax and spending spree package did not pass last year, as that would only worsen the problems we are seeing today. I trust the Federal Reserve is on the case to address this inflation. I want to make sure that we here in Congress don't do anything to make your job more difficult than it already is. Moving away from inflation, I'd like to briefly address the Federal Reserve's dual mandate. Chairman Powell, I think it's safe to say the Federal Reserve has its hands full already trying to achieve its statutorily mandated goals of promoting maximum employment and stable prices. However, many have called for expanding the Fed's role to wade into politically charged issues for the first time. The Federal Reserve has a long history of political independence, and I worry that independence could easily be undermined. Chairman Powell, will you commit to strictly following the Fed's dual mandate and not expanding it in ways that are not clearly supported by the law?
Yes.
I know Senator Crapo mentioned this earlier, so I will just add briefly to his remarks on the Fed's report on the costs and benefits of a central bank digital currency. It's a topic that we want to start discussing here, so it'll be helpful to have the Federal Reserve's insights. And I very much appreciate that you are working to get this report out in the next few weeks. My question, Mr. Chairman, is the FSOC recently designated climate change as an emerging threat to financial stability. Can you describe a sequence of climate-related events that would cause a financial crisis?
So it's a good question. The way there are two different kinds of risk, right? There's physical risk and then there's transition risk. So physical risk tends to be these risks in the form of extreme weather and that kind of thing, and they kind of accumulate over time gradually. And to have a financial stability disruption, something that actually threatens the financial system, it doesn't result from that kind of a process. So it doesn't seem likely in the near term that it would come from physical risk. So that means the real risk would be transition risk, and what that means is some surprising event would have to take place that destabilized the whole financial system and maybe caused a very large financial institution to fail in a disorderly way. And how would that happen? It conceivably could happen through government policy, or it could come through an event, some kind of a public event that really, not unlike the pandemic, only related to climate in some way. So those are the kinds of things. These are not things that we think about it will happen every day, but it's more a question of over time what can happen from climate.
So just a follow-up to that. This morning, I was with Chairman Manchin of the Energy and Natural Resource Committee, which I serve on. We had a hearing on hydropower. And there's a movement afoot in this country to breach hydropower dams, to breach dams. We've already seen blackouts in the U.S. and other countries because of forced closures of reliable baseload energy, whether it's been nuclear plants that have been shut down, coal plants have been shut down. They're talking about breaching dams. Do you think that rolling blackouts due to a lack of stable baseload power poses a more tangible and real near-term threat to the stability of the financial system?
I have to think about that. I will say that to have a successful, if you're someone who wants to see a transition away from carbon-based energy, we're going to need a lot of energy to facilitate that transition, and I think that means we need to be honest about having to rely on more traditional kinds of power.
Yeah, what's mind-boggling to me, and this will be my last comment, Mr. Chairman, and I'll finish, but what's mind-boggling means we have sources of energy that do not emit carbon, like nuclear, like hydropower, and yet we see these ideological movements that are seeking to shut down nuclear plants, shut down hydropower in some cases, which I think pose a significant risk to the stability of the grid as well as to our financial system. Mr. Chairman, thank you.